All right, good afternoon, everyone. Today is Tuesday, October 1st, 2024. Our goal here is to review the market generated information in a holistic fashion. We are intimately following the narrative of both ESN and Q. If we have time, we'll theorize and add additional commentary towards the end. We did upload our video today. It's missing the first 15 to 20 minutes of the A bracket. But we did record the rest of the rest of the 2 hours to Euro close. So please check it out when you get time. Some interesting action for today. But okay, all right, let's go ahead and start off with our narrative and our summary questions. Where is the market coming from, and what is price trying to accomplish? Again, we did have our month end. I'll take a quick peek at the monthly candle for the S&P 500. So again, I think this is like a hammer candle or inverted hammer candle, I think. But solid close to end the month. So now we're starting October. First day, the as we closed here, the goal was to ideally make a new high, but for sure protect their low for the buyers as they've been in control for the highest time frame, the intermediate, and on the daily momentum. So clearly we can see that that was not done. We'll look into context a little bit more shortly. So we have our monthly, we have our weekly, we have our daily for the NASDAQ. Same situation, except they were starting a little lower. Ideally, they wanted to protect their prior low, these 20K 50s, and ideally push above the Friday candle, which was 20K 400. So again, the technology sector, the Nasdaq failed as well. So just understanding, how we performed today, it really wasn't too much on the catalyst for the earnings, but definitely for the news. A lot of geopolitical tensions going on. There's like some strikes that are happening for like ports. So a lot of news, just like in general, that's not earnings related. And again, we do have the vice presidency debate tonight at 6 p.m. Pacific. So again, we had the PMI at 645, the ISM construction spending, and the job openings at 7 a.m. So just a combination of all of these today was pretty heavy and impactful. So again, this was the majority of our earnings until the non-farm payrolls on Friday, and we have a little bit more on Thursday. But anyways, today was important for the 7 a.m. data. Looking at the actual, I'm not sure what else to have, it's fine. Looking at the actual daily candles, you can see that we have um, created the most volume that we've seen since September 10th. So a lot of volume, and that started with the open drive that caught a lot of people off guard. Whether it was regarding the geopolitical tensions or some of the data, you'll let that speak for itself. So again, heavy sell delta for the past 3 days for the minimum, and we even finished with a lot of strong sellers. Even with us starting the session so far, we already have it's lopsided with the sellers. So just a lot of sellers have been coming in, but we've been talking about that recently. We've even been reviewing it each day and kind of notating that. So about 90 points of range, so almost 100. Very, very strong for the sellers. Again, same situation here, B-shaped profile as well. You can see the majority of the sellers were done in this midpoint and towards that last third with 500 points of range for the NQ. Same situation with the volume all the way until September 10th. And you can see sellers were pushing it the highest they've pushed it since that's on this chart. The minimum we got to was almost 9,000. It was 8,900, and we finished at negative 6,300. So sellers were just absolutely relentless today on the passives and on the aggressive side. Looking at the actual sector tracker, we can see that S&P was down almost 1%, with the main key to the downside was technology, and a lot of that was from the big players: Apple, Microsoft, Nvidia, Broadcom, really everyone. No one was safe inside of technology today. But if you'd have told me that we were down 2.5% on technology, I would imagine we would have had more downside. But do remember that the rebalancing was like 2 weeks ago, so we're able. This blow was a bit softened more than it would have been a few weeks ago. And it does help when you have discretionary that's not doing terrible, them being down, just 40%, so just 40 basis points. And then with the financials and then the healthcare down about 0.5%, everyone did pretty bad today. No one really cares about energy, at least as of right now, regarding the S&P 500 and the weighting. But this is important given the geopolitical tensions that we're seeing regarding the Middle East. And then you have the utilities that led outside of the energy. So really not too much to show here. Big down day for technology. All right, and then we'll look at the market profile. So we'll start off with the S&P 500. I went ahead and marked the singles that showed up today. This was a B-shaped profile. Very minimal activity done at the highs, and the main was done towards the bottom half. I did do the singles. These have already been charted. And that was just from the A bracket sell-off. So you can see we started near right above the 5800s, and then we had a big open drive to take us through this VPOC zone that we've been looking at. This is just the composite for the month of September. So just a lot of the most traded volume was here near these 58s, the 5785 to be exact. So just a lot of volume for us to be kicked down under. And then we essentially just base between there and then the FOMC high zone, which is 57.56. So again, we essentially just kind of sat here and just kind of chopped around, push a little bit lower, push a little bit higher, but essentially we just kind of bear flag, big steep sell off, and then we just kind of sat sideways. Again, we've been seeing this to the long side recently, with just the big first hour or so, and then just kind of consolidating. Really not too much from there. So this was just a big repricing, pushed all the way down to this zone that we've been kind of talking about where some stops were. I'll go ahead and expand that, but it's this zone here. So former stops, and then just even this kind of like last line in the sand, 57.30. So again, the buyers did a good job of defending price there and pushing and closing above that FOMC zone. We're already back into it now, but this is like the fourth time that we've kind of came back into this zone. So I would imagine we may have a little more downside if we continue to beat on this FOMC high. That support may indeed turn into resistance. So really not too much to look out there. Just a B-shaped day, long liquidation trend day. We'll look at the candles and the intraday shortly, but just a little more context for the NASDAQ structure. So again, we started above the 20K, about the 300s, and then we got repriced through yesterday's low for the most part, and now we're just sitting under this VPOC, the volume point of control for the last month for the NASDAQ. And we essentially just bear flagged under there. And we're now filling in this space. So essentially the majority of this day was just filling in this gap here from last month. So again, just this low volume, like kind of crevice. We're just really filling that out. And we did break through the FOMC high zone, which is the second time we've tested it since its creation. And we're able to beat through for about 50 to 80 points, I believe, and end up closing above. And we're still kind of holding above now until overnight, but we'll see how long that lasts. And day two had singles, which has already been drafted. So there we go. So for a little more insight, we can look at the same NASDAQ, but just on a 138-minute candle. Again, we just got repriced through this zone. So now we're just kind of sitting in that valley and literally just building volume sideways, down, up, down, up, down, up. And now we're just kind of stuck at down as of right now, but we're just building volume because we kind of just slipped through last time. And anytime we just kind of looked down and shot back up, look down and shot back up, look down and shot back up. So yeah, really not too much to speak there. After the repricing, we essentially just bear flag. And again, we'll see that on the intraday charts as well. So looking at the S&P 500, again, we did break through that FOMC zone and we did test where those stops were. Pierced through it just a little bit and then popped all the way back up to where those singles were, but could not actually eat into those singles and then fell back and drifted back towards that FOMC zone. So again, really not too much going on here. We're just kind of flirting with this FOMC zone. So ideally they want to keep prices above. If not, there's a whole chance that we may find ourselves below and really start eating into that midpoint and even lower, which they don't want to give, buyers don't want to give up that FOMC zone. Going back to the S&P 500, and again, we had our big impulse down for that hour, and then we essentially just sat sideways for the most part. Yeah, we did kind of look below, we came back up. We did kind of look up. We did kind of look above, came back down. Couldn't trade any lower, went back up, and then traded back lower again. So really not too much is happening there, but you do want to take note of the extremely high volume, especially for the sellers. They let off the gas here and then sold, let off the gas, and then sold again. So this makes sense. So I would imagine this may be not only long liquidation, but this also may be some new money shorts, especially since these are the same people that's possibly been selling for these past couple days. Because again, we have been talking about the negative delta that we've been seeing. So it seems that they're really defending these prices and ideally trying to kick them lower. So curious if we're going to see some kind of like a retest, fall short, and then maybe an extension lower, if that makes sense. Just for a little context there. Looking at the NASDAQ, same situation. We had our open drive, and then we essentially just chopped sideways, tried to look above, and ended up closing right below it. So really not too much to show there. Same situation, higher volume, a lot of negative delta, except they kept pushing. They really tried pushing. They didn't say, you know, fuck it, I'm done. Kind of gave up, pushed above, and then probably just some longs covering their, just licking their wounds, if you will. So again, not really too much to go off of there. Pretty simple trend day down. Okay, let's look at the 3 minutes. So we have our, again, this is the, bear with me. This is the Sunday, Monday night, today. Looking at the S&P 500, we did sit sideways. We looked below, shot back above, built sideways, shot lower, even lower, trying to come back up. And it appears that we may be rejecting, kind of what we were mentioning with that footprint. That's what the sellers want to see moving forward, but that also may be what's happening in the now. However, I'm looking at the overnight session again, we just essentially just sat sideways. All right, sorry about that. So again, we have our balance here for the overnight. So again, fairly simple. We had our big short covering. Excuse me. We had our big short covering rally that we saw yesterday in a bear flag. So you would imagine we're gonna see, maybe another leg higher, something like this. Absolutely not. We got, we were just horrible to the downside, but we won't get ahead of ourselves. Again, a leg lower, leg higher. Okay. And leg lower, new low. Okay, that's fine. Leg higher, but it's a higher low. Excuse me, it's a lower high. Okay. So we ended up closing in the middle of this range after everything we just kind of went through. Okay, cool. So although we are bear flagging and we're in this range off a trend up day like a reversal, cool. What would one expect? One would expect some continuation to the upside, like we said, but we didn't get that at all. I'm a little bit confused to see the open drive. Again, I didn't see this in real time. I had to run on my screen. I was trying to take some time off, but whatever. Um, we had our big open drive again. The open is near the initial balance high, and we really just push lower. This is very surprising. Just these first until the first green candle, we dropped from the 808s to the 70s. So that was almost 40 points in 9 minutes. Let's call it 10 minutes. You know what I mean? So this is just interesting. This is very interesting. Consolidate sideways, swallow through, consolidate sideways. We had our SOC for the 7 a.m. data, kind of sat sideways and broke lower. Really not finding too much continuation under. Retest the low of that SOC, created a new low because we couldn't have any upside. Cool. Let's go right back up and try once more time. Still getting rejected. New low. Let's try one more time, except they get a little more excursion within this zone. So they ended up touching the midpoint eventually. But essentially, they just sat sideways, a little lower, a little higher, a little lower, and then they failed at that low again. Okay, so you would expect a new low, right? No, there's no new low. They defended and then they reclaimed this 5 smoothing average. They even tried to look below, scurried back up, and then we had like a nice little trend up to push us through the high of that zone. And then we ended up closing essentially at the low of that candle. So again, when you look at this is the worrisome part for sure for buyers. However, the the manner that this came down, and again, you can see the cluster of sellers that was just really forcing things down. And then we have this, if you look at our video, I put like a little timestamp, and you can see this big ass candle happening in real time, which was so cool to see. Please look at this. This was so cool to see. But I digress. Sorry, I get a little excited. So again, when you look at this in real time, I'm sorry, in hindsight, this actually doesn't look that bad. You know, yeah, I may be kind of losing it a little bit, and I know we broke the weekly low from the prior week for both, but kind of looking at this for them to reclaim and close within this initial balance low and the low of this SOC candle, I think this was a solid recovery from the buyers, especially giving the sheer aggressiveness that happened. So I'm not saying that this was a bid pull and they let them go, but this will be easily pushed through as these are just singles now. So kind of say what you will, but this is poor structure, no different than the poor structure with this. So it seems like we're just in the same situation. This is just essentially just like a mix and match. So I mean, for the most part, we're just kind of continuing where we are down here, which is the bit of a bearish part. So say what you will about that, but I want to get ahead of myself. We have the Nasdaq, same situation here. That short squeeze from yesterday, we ended up, you know, chopping sideways. We had our big impulse lower. Same situation, except they couldn't retest their SOC zone at all. They kept falling short. So you assume this would be much weaker. But it just seems like that all this energy that was expended in this first hour just fucking stopped. I mean, we looked below a little bit, and then that's about it. It was just no more. It was just no more. So I mean, you had like some little small legs. I wouldn't look too much into this, but the fact that no one wanted to push this any lower when they could have, when buyers were at their weakest, it I don't know. It's just interesting. There's some information to see. So again, let's take a quick look at the breakouts. A few trades that make sense that's part of our playbook. We'll break this down to a 1 minute candle just to kind of clear things up a little bit. So again, we had our open drive, and then as we're bear flagging into the SOC candle here, again, you can watch this in real time, and you're seeing this happen. You're seeing these buyers getting stuck, really exerting a lot of force to push up. and not getting any kind of continuation. So, okay, that's all information. You don't trade this exactly, but in my system, when we break this SOC low, I would imagine um, these people that bought in here will want to liquidate. So I mean, let's say you have your stop here at the 2009. You know, if you have your stop here below above here, I mean that's gonna be a whole ass like 50 points. You really shouldn't need to do that. You really shouldn't get past this candle here. So I mean that'll break it down to about 30 points. I will have to widen my stop given the volatility, but this just makes sense, and we can really target that FOMC high since it's been a while since you retested that zone, and given the context of where we are, and then the massive amount of buyers that are stuck here, I would imagine we would get some sort of a puke to push us through this initial balance low. And I even have an opportunity to add on that retest here. And we ended up hitting that low. I believe it ended up being like around here essentially. Ended up caving back a little lower. So, you know, the one trade will be there. Then we even have our retest given all the context that we just discussed here. So this makes sense for us as well. I'm also sticking with the NASDAQ. Once we had and again, we had this in our playbook as well. I need to kind of clean this up, but we have our one leg pullback, two leg pullback, three leg pullback. So you would assume maybe in here, you start looking for a particular long, especially on these 5S reclaims. But there was no real pullback to really gauge like the strength of this. It was just kind of, you know, real squeezy, just really quick. But that same concept played out on this fourth leg down. And instead of this being a pullback, we ended up having a little bit more of a continuation. As you can see, we ended up making this new low, and we tried to come down again on this 1 minute, but they failed. And they scurried back up to this 5S. Okay, cool. We're not trading off that exactly. We pushed through. Okay, that makes sense. So not only are we pushing through, we are engulfing this whole range above us. Okay, but we sell. And then we sell some more. I need to be looking to buy in this situation here around this A28 time frame, where they're buying this low or as we're making our way back into this 5S, risking the low of day, which ended up being like 20 points or so. So this is part of my trade here for the 5 smoothing average, and then definitely on the breakout, and then the initial balance low retest, given the context of the narrative, and then the lack of continuation to the downside. This would be a mean reversion play, targeting the initial balance low. So all this is nice and dandy, the fact that you can get above, but I really want to sit through all this, to be honest. I actually did it in sim, and I even got out of it then. Just saying. So same situation here for the ES. ES may look a little bit cleaner, but for the most part, it's still the same. The long made a little more sense to me on the NQ, and given it's been excuse me, since it's been a while since we've tested that FOMC range. But that same a 30-ish time frame is here where you kind of pushed above, pull back. Notice they didn't break that 5S at all. So just kind of playing just more of like a little continuation play opposed to buying that pullback. So same situation there. And then even with the retest of the SOC lows, 1, 2, 3, you had multiple attempts. And, as time progresses and you're trying to go back to redo these retests of these shorts for this zone, this doesn't really make sense because you're kind of beating through this resistance and it's eventually going to fail. Yeah, it may have worked a little bit later on with the middle and downside, but this kind of used up at this point. So again, same thing with the shorts and then the breakouts, and then the same with the structure pullback as well. All right, so we'll go ahead and pretty much end it there. I think we covered everything. So again, solid day for the sellers. They are not in control, and we're not going to say they have control of the higher time frame or the intermediate. We'll give them credit where it's due, as on the momentum and the sentiment for the short term. But for the most part, we really want to make sure that we're staying in alignment with the market and following the buyers, as they've been quite resilient and eating up as many sell impulses as possible. So looking and grading the buyers, we'll give the ES and the NQ, maybe about a 4 or 5 today. Again, the fact that they're able to close within the balance range, and though they are leaking lower within the overnight, solid day for the buyers, and then a little less for the sellers. We've seen big impulsive days that's really broken through. This is, without doing too much theory and speculation, this possibly is a step in the right direction for the sellers. But again, this is so much work that they really need to break through. I mean, the sellers are just now getting back to this composite value area high. We're not even near the 5,700, which can come in overnight by all means, but it's just a lot that they really need to go through. So again, we'll definitely see moving forward. Um, we do have the the Vance Waltz debate tonight. So make sure we're staying aware of that. Be mindful of any kind of geopolitical tensions. Anything can happen in the overnight, and it's really important for us to make sure we're getting our rest and staying solid and staying focused. Um, really, not too much else to add there. Let's pay attention to this week. We do have more data coming on Thursday and Friday. Tomorrow is going to be a little bit lighter, but there's definitely some activity going on, even with the VIX is picking up. So I believe it's like around 20 or so. So again, take care of your mental health and get some rest. Thanks for being here.